In the beginning of last month, the Monetary Policy Committee of the Central Bank of Brazil cut the interest rate for the first time in 3 years. The cut was half a point, and the Selic rate now stands at 13.25%. This week, we learned that inflation in Brazil continues to rise, but increased less than expected. And next week, the Monetary Policy Committee will meet again to decide what to do with the interest rate. I'm Diogo Rodriguez, a finance reporter for the Brazilian Report, and this week we will discuss what the market expects from the Brazilian interest rate. Will there be another cut? If so, what will be its magnitude? And thank you for being with us on Brazil This Week. Before we get into this week's discussion, I'd like to invite you to subscribe to the Brazilian Report. And if you have already subscribed, you can support us by donating a cup of coffee on our Buy Me a Coffee page and subscribing in our YouTube channel and following our other social media channels. This week, I'm joined by Deputy Editor Fabiane Ziolla Menezes. Hi, Fabi.
Hi, how are you?
I'm good, thank you. So, Fabi, Brazil's central bank meets again next week to discuss the interest rate. What has changed since last meeting?
Well, analysts say that things, especially the things to which the Monetary Policy Committee at the central bank pays attention to, things are going just as expected, not only by the economists in general, but by the committee itself. So, consumer prices have risen by 4.6% in the last 12 months through August, getting closer to the 4.75% upper limit of the target, of the government's target. But this was already expected due to some factors, but the main factor is that is due to artificially low baseline from last year, when the former Jair Bolsonaro administration made great efforts to control prices before the election, cutting the taxes on fuels. Gasoline is the item with the greatest impact in the basket of products and services that made up the IPCA, which is the official inflation index. So the return of the fuel taxes in the second quarter of this year, and also the correction of the prices of Petrobras refineries in August, these both measures had an important impact on the inflation. And this impact should extend at least until September. Analysts are talking about 0.10% of impact due to this resuming of taxes on gasoline and also the correction of the prices. Also, the other thing that the central bank is attentive of is the services inflation, the inflation within the services sector, which is something that the central bank follows up close in its models of analysis because of the weight of the sector upon the economy of Brazil. The services sector answers for around 70% of our GDP. So the inflation within the sector is also very important. And it has slowed down. This was expected to happen, but I think that all the economists were happy with it, and it reached its lowest annual level since January last year. Nevertheless, by the end of the year, the leading financial institutions, they are expecting inflation to hit something around 4.9%, which would be higher than the upper limit of the target. Even so, they all expect inflation to be, let's say, under control, and this is very much the main factor for the central bank to make its decision. So I think that all analysts are waiting for another cut in the next meeting of the next week.
I see. And what is the market expecting for next week? Will we have another cut in the basic interest rate?
Yes. So in the minutes of the last meeting, the central bank already made clear that it intended to make cuts of the same proportion, that is 50 basis points, 0.5, in the following meetings. If the factors, some of which we talked about in the previous question, proceed as expected, especially if inflation continues to converge towards the target. Last Monday, the Focus report, the report on which the central banks surveys the leading financial institutions here in the country, pointing to a benchmark interest rates of 11.75% at the end of the year. So this means that on average, analysts are expecting at least 2 major cuts in the next 2 meetings, October and December 2, maybe even bigger to reach the 11.75. But yes, the expectations are new cuts on the following meetings.
I see. And but just before we get more into that, I'd like to ask our viewers to subscribe to the Brazilian Report, which is the journalistic engine behind our podcast videos and social media. What you see here is just a tiny fraction of the content we produce with sharp, independent, and impactful analysis and reporting. Our newsroom has broken major scoops, such as the plot to hack Brazil's chief electoral justice and the massive diplomatic operation to solve a semiconductor shortage to equip voting machines ahead of the contested 2022 elections. If you want to contribute to independent journalism with an emphasis on independent, you should subscribe to our content. If you have already, check out our Buy Me a Coffee page and donate a cup of coffee to our reporters. You can also join a Buy Me a Coffee community to get exclusive access to behind-the-scenes content on how we make our journalism and stories about Brazilian culture and society. You will also get a shout-out on our Explaining Brazil podcast, buymeacoffee.com/Brazilian Report. And Fabi, can we say that inflation is under control now in Brazil?
Yes. Yes, economists are already saying that the deflationary process is ongoing. In August, we had some good signs of it. For example, the core inflation, the one from which economists exclude the most volatile prices like food, energy, this core inflation continues to fall. So the 12-month core inflation fell to 3.8% in August, against the 4.6% index that we talked before. Also, food inflation has been falling. It fell for the third consecutive month in August, which is especially good for low-income families. We may have some inflection in this variable here because we may have some seasonal reasons for this in the coming months. Well, warmer weather always hinders food production in the country some way, driving prices of some everyday food products up. So this may happen, but so far food inflation has been falling. And on top of that, it is expected that the services inflation that we also talked before will decelerate further, which could compensate for part of these items going up. So yes, we can say that inflation is under control and will be under control by the end of the year too.
And what about the long run? Can we expect a single-digit rate anytime soon?
Not so soon. Most economists see the current easing cycle of the interest rate stretching until the end of the first quarter, or maybe the beginning of the second quarter of the next year. There are there are how can I say, at least two main reasons for that. The first is a domestic one. Next year would be an electoral year, so we will hold municipal elections in 2024. So it would make sense to interrupt the process in the second quarter before the final stretch of the dispute. This is what normally happens in Brazil. The second reason is the difference between interest rates here in Brazil and those in the strongest economies like the US and Europe, which are still experiencing their highest cycles. Today, for example, we had the Central Bank of the European Union rising their interest rates again. Economists don't know if this is the end of the cycle for them. So what they say now is that this is smaller interest rate difference, between Brazil and the other economies. This puts pressure on the weaker currency, which is the Brazilian real. And this could make the central bank, this could be one of the factors for the central bank to extend the cycle of cuts a little further. Economists at the Itaú, the largest bank here in Brazil, for example, cited this reason in their last report, when also analyzing what happened in 2020 during the sharp cutting cycle of the interest rates because of the pandemic. So the expectation is for a smaller Selic, our interest rate here in Brazil in 2024. But if it would be a single-digit rate, it remains to be seen. The Focus report points to a median forecast of 9% by the end of 2024. But some of the main economists and financial institutions say that the central bank may follow a more conservative path than that, and then we will end the next year around 10% or closer to the 10%. So the single digit could happen, but it's not certain.
All right. So that's it for today. We'll keep following, our coverage on the Brazilian Report. And thank you, Fabi. Thank you for joining us.
Thank you. It's great to be here.
Thank you. So just to remind you, if you enjoyed this live stream, go to Brazilian.report to keep reading on this subject and to discover more about Brazil and Latin America. Before we go, just to remind you that the Brazilian Report is an independent media outlet funded by subscriptions. So we encourage you to subscribe to the Brazilian Report. We have different subscription plans, and we're sure that one of them will fit your needs and your budget. And if you're already a subscriber, or if you're not ready to subscribe, you can support our work by buying coffee on our Buy Me a Coffee page. Go to buymeacoffee.com/Brazilian Report to buy us a coffee or to become a member and get access to exclusive content and perks. So thank you for being with us. Thank you, Fabi, and we'll be back next week.